try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since we've been out there. The government. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin. And in today's episode, we are going to be talking about the rally that is expected to come to Bitcoin over the next week. Because you see, on April 12th at 8:30 a.m., the Bureau of Labor Statistics will be releasing a piece of data called the Consumer Price Index. Now, this is a piece of data that is updated monthly, and it shows the change in inflation of the US dollar on a month-by-month basis. Right now, over the last 12 months, we have witnessed 6% inflation of the US dollar based on the way that CPI tracks it. But over the next month that's going to read and print out with new data on April 12th, that's likely to drop, where probably by about 0.2 to 0.3% as things like the housing market start to calm down a little bit, as things such as the petrochemical industry in the United States starts to calm down, as industries such as the agricultural and food industry start to stabilize. Inflation is coming under control slightly and not permanently, because as I've talked about on the channel plenty of times, we are very likely to see continued inflation of over 3.5% to 4% throughout the better part of this decade, at least the next half decade. But much of that's not going to kick in for the next couple of years as we start to see the deindustrialization of the Chinese space and the South Pacific space. And we start to see the entire manufacturing plant have to be rebased in the United States, in Mexico, and back into Europe. So when that occurs, that's going to drive a lot of inflation. But over the next year or so, we probably will see a market downtick in inflation. And that paradoxically actually leads to rallies on Bitcoin. If you watched last week's video, I talked about something called the CPI cycle, and the CPI cycle effectively tells us that whenever we see a CPI data release on Bitcoin, we are extremely likely to see a massive rally on Bitcoin. In fact, the last time that we saw a CPI data release for Bitcoin, we saw CPI show that inflation came down by 0.4%. That's 0.4%. And with that data, Bitcoin rallied over $9,000 in the span of 2 weeks to where we are right now in the $27,000 to $28,000 range. That's happened 3 times this year. The biggest rally was $9,000. The smallest rally was $3,300, and that was only on a 0.1% drop on CPI. 0.1% drop on CPI, and Bitcoin rallied $3,300. And on April 12th of next week, April 12th, which is Wednesday of next week, we're going to see CPI drop, and we're more than likely, the data drop, and we're more than likely going to see the number drop by 0.2 to 0.3%, which will likely, based on historical analysis and the fact that Bitcoin's starting to go into a bull market of its own steam, not just because of external factors such as CPI, that's very likely going to drive us well to the upside, up to, I believe, about $32,935. Right? That's been the theory. That is the prevailing hypothesis of what is happening to Bitcoin and what will happen to Bitcoin. But I want to analyze this from a contrarian's point of view, because there are a few different trends, namely on the SPY and on the Dixie, that I think could be a little bit worrying, that may put a slight damper on this rally. So we're going to dive right on into all of that and take a look at all of that. This is Coffee and Crypto, but you guys know I went off of coffee to prepare for the baby, because the baby's going to be here any day now. Her due date is April 20th, which is 2 weeks from today. So that's the Thursday after next. She's almost certainly going to be here before then. In fact, if she came on the same time, 38 weeks and 5 days, calculated the due date the same way, she would be born 2 days from now. So baby's probably going to be here very, very soon. So I might not be here April 12th because naturally, you know, we'll have maybe a 3-hour-old. We'll see what happens. But I want you guys to be as prepared as possible, because there's a lot of volatility coming here this month. I said I went off coffee because I want to make sure coffee's nice and potent for me during those first couple of months. So this is now agua in crypto. Make sure you guys stay hydrated. Let's go ahead and read some chat. Really appreciate all of you guys tuning in. We've got over 200 people, and we just started. Thank you guys so much. We've got Crypto Manny Bear coming in first, said hi. We got Shadrach Frost, said woot indeed. Woot indeed. April 12th could be a huge day. CPI, Ethereum update, and who knows, maybe your daughter comes on that day too. It is very possible that April 12th could just be an amazing day all around. Amazing day for Bitcoin, amazing day for Ethereum, amazing day for the McAfee household. Every day is amazing when I have my wife with me. Sean O'Brien is in chat. Oh my is in chat. Said, good morning. Have a good day, everybody. Being BTC Crypto Alerts said, morning, Jebb and all. Shadrach Frost said, good morning, Jebb and chat. Crypto Surg said, good morning. Win Peoples said, good morning, all. Mike Lowry, our moderator and a member of the CPI Council, said, good morning, everyone. Good morning to you. Crypto Manny Bear said, good morning, fam. Wisely T said, wow, my copy paste stuck. There you go. It did. You came in third. Good job, man. Mike Lowry in chat, moderator and member of the CPI Council, said, hit the like button and subscribe if you aren't. By the way, drop a 1 in chat if you'd like me to bring back some like members live streams or something for the members. I would love to do something like that. I am stretched so thin right now, but in future, I would love to do kind of content like that. I want to bring more content to Club DeFi and more content to the YouTube channel, but I would love to do something of that kind at some point in the future. Mike Lowry said, hit the like and subscribe button if you aren't. Crypto Mini Bike in chat. I have the Beholder in chat. Crypto Mini Bike said, I am here while framing my off-grid cabin. Keep us updated on how that's going, Crypto Mini Bike. It sounds like you have an awesome life riding around on mini bikes in the middle of the woods and building a off-grid log cabin. That is just absolutely awesome. They should make a TV show about you, dude. Really hoping to become a DeFi member. Jonathan Weiner said, really hoping to become a DeFi member soon, but between getting out of the military, having a baby, buying a house, and other financial crises, I don't have any spare funds to start the course soon. That sounds like a lot. I would encourage you to make sure you're as stable as you can be before you go and jump into education. Make sure you're good with what you have already going on, and then dive right on into education. Totally fine, my friend. It'll be there whenever you are ready. I've had a ton of people joining Club DeFi. We had 3 people join in the last 12 hours. Like, people are joining Club DeFi left, right, and center. By the way, if you guys don't know what Club DeFi is, that is our educational academy where we teach you everything that you need to know about technical analysis so that you can get started here in the cryptocurrency markets. Just go to bitcoinacademy.teachable.com or go to the first link in the description or go to cryptojebb.com. You'll find links over there. And you can find our academy here with over 60 video lessons teaching you everything that you need to know about technical analysis. As I tell you guys all the time, technical analysis is the way that you listen to the market. Quite simply, the market is always shouting signals at you. And if you were able to listen to the market, you would be able to, let me put it this way. This is a bold statement. I've been doing technical analysis for 6 years, nearly 6 years in like 2 months. And what I've learned is that if you were able to listen to the market every single time, and every single time you did exactly what it told you to do, you'd make every trade perfect. Because the market is always giving you signals. It's always sharing with you what it's going to do next. The only variable that the market itself doesn't know is what external market factors are going to do and how that will impact the market. But as soon as the market has downloaded that external information into itself, it is projecting a signal to you, the trader and investor. It is your job to learn technical analysis so that you can listen to those signals and follow them. The market's always telling you, buy me now, sell me now, dollar cost average me now. Whatever it is that you're supposed to be doing in the market to make money, the market is telling you that. Whatever you're not supposed to be doing to make sure you don't lose money in the market is shouting at you not to do that. But the way that you understand those signals is by learning to communicate with the market. You have to look at the market as the first example in human history of mass intelligence, of almost this autonomous, super intelligent, super collective intelligence, similar to how you would think of a supercomputer. The thing about markets is that they are intelligent beings because they're created up of intelligent beings. Humans are the ones doing the trading for the most part. There's bots, but for the most part, markets are driven by people. So a market is the manifestation and the machinations of the traders and the investors. That's what mass psychology is. That's what we talk about in this video right here in Club DeFi. Video number 11. Very important concept. The market is simply a manifestation of everybody's thoughts, feelings, informations, emotions, character, personality, etc. Life experiences, demeanors, traits, backgrounds, ethics, morality, religion, politics, all of that thrown together into a market. The better you understand the signals that almost sentient conscious being is telling. I know this sounds crazy. You're thinking Jebb's got a tinfoil hat on behind camera. I swear. No, I'm serious. The market is a collectivization of intelligence, and it is trying to tell you something because the market's being driven by other people behind a trading screen just like you. So if the market is talking to you and you're not listening, then you're not going to get the signals. But if you listen for the signals and you understand how to listen to those signals by understanding technical analysis, you will succeed. in cryptocurrency. You will. It just takes the work to educate yourself and then to go do the trading and investing. That's why we created Club DeFi's Principles of Technical Analysis. All right, you can find those links in the description box down below, but let's go ahead and jump on to CoinMarketCap. Right now, Bitcoin is trading just shy of $28,000. You can see it's trading at $27,933.70. It has had a small correction over the last 24 hours, and we're going to talk about that. It's also down over the last 7 days, down 1.89%, but it is the only one in the top two that is. Ethereum is down 1.59% over the last 24 hours, but it's actually up over the last 7 days, 4.27%. Remember the cycle that we've talked about here, the altcoin engine, as I call it. Oftentimes, what you're going to witness is that Bitcoin and Ethereum are going to trade back and forth and back and forth and back and forth on their market dominance. We saw this happen in 2017 during that bull market. We also saw it happen, fast forward here, into 2019 and into 2020 and into 2021, mainly into 2020. We saw a trade-off between Bitcoin and Ethereum, and then Bitcoin and Ethereum. And when one was low, one was high. And when one was low, one was high. Right now, it seems that Bitcoin is struggling a little bit more than Ethereum. Ethereum is doing relatively well, which means that some of the profits are more than likely coming out of Bitcoin and moving into Ethereum. If you look at the Bitcoin chart, Bitcoin is down over just the last 24 to 48 hours. Ethereum is down as well, but it's not down as much. If you look to where Ethereum was on March 27th, it rallied a grand total of $255. That's up 15%. During that same time, Bitcoin went through a rally, but Bitcoin rallied much quicker and then started to go through a correction. Bitcoin and Ethereum rallied together, but then Bitcoin went through a correction, and its correction is likely one of the things that drove Ethereum's rally. Now, I want to talk about Bitcoin, Ethereum, Cardano. I want to talk about the whole gambit today, but the first thing that I want to dive into are some of the risk factors that Bitcoin is running into. So let's go over what the setup is for April 12th next week, and let's also look at the likelihood of that happening based on looking at some of the risks that are being posed, some of the threats that are being posed to that scenario. All right, on the 4-hourly chart for Bitcoin, you can see why Bitcoin is so bullish. We saw the last CPI data release come in March 12th at 8:30 a.m. In doing so, Bitcoin would rally over $9,000, nearly $9,400 in just shy of 2 weeks. This is the largest rally that Bitcoin has witnessed in months? No, years. That is the biggest rally that Bitcoin has witnessed in years. You have to go all the way back to October of 2021 to find a rally where Bitcoin moved that far, that quickly. You have to go to the beginning of October, end of September, 2 years ago. This is a major rally, and it was driven entirely by the CPI data release. Now, the CPI data released at 6%. It was at 6.4%. So we saw an acceleration of the drop on CPI. I'm not sure you're going to see the same thing this time. We may only see 0.2 to 0.3%, but we saw 0.6% drive the market $8,000 of the upside. We saw 0.1% drive the market to the upside over $3,500, and we saw 0.4% drive the market over $9,300. It is very reasonable to believe that if we see a 0.2 to 0.3% CPI data release, that Bitcoin could easily break a $5,000 rally all the way up to $32,935, which, if you will remember, if you're new here, that is the level of support, the level of resistance that is absolutely pivotal for Bitcoin to get above. Why? Well, that is the level of support that was set here on Monday, January the 24th, 2022. Once we broke below that level, everybody realized we were in a bear market. We were actually in a bear market during this whole time, but many of the people in this space, including myself, were hoping that Bitcoin would be able to bounce off of this uptrending level of support right here that you can see drawn and then continue the bull market. Well, that's not what the halving cycles had in mind, and that's also not what inflation, the war in Ukraine, the deglobalization movement beginning, and other geopolitical and macro factors had in mind. Instead, what they had in mind was Bitcoin going into a bear market. And the bear market was really confirmed in many people's minds when we dropped below this uptrending level of support at roughly $35,000, and then also when we dropped below this flat level of support, again, that was defined here on, I believe it was the 24th of January, which was a Monday, month to the day before the invasion began in Ukraine. When we fell below that level, we would go on to drop $7,500 in a couple of days. That was the nail in the coffin. Pretty soon thereafter, about a month later, moving into June 2022, we saw the Luna fiasco, and Luna collapsed in on itself like a house of cards. If Bitcoin gets up to $32,935, that means we are in range of a bull market. If we break above $32,000, $32,935. That means, in my opinion, we have then thus confirmed a bull market. Very, very exciting what we're watching happen here. And it is very likely, in fact, very possible, that Bitcoin could go through that massive breakout above its level of resistance that it needs to break, $28,545, relatively soon, and go into a major rally. So that's the layout. CPI data releases coming in. Historically, CPI data releases, the size of the one I think we're going to see, drive Bitcoin anywhere between $3,000 and $9,000 to the upside. $3,000 and $9,000 to the upside, be about $4,000 to $5,000 in the middle there on the median. That would push us towards the resistance at 32,935. I think that's very likely that that's what we're going to see happen. And again, I don't want to take credit for any of this. This is the technicals shouting this information at me. I'm just the messenger. I'm just a translator. I am translating from chart to English. That's the job of a chartist, is to translate from the language that the charts speak to English or Spanish or Mandarin or German or Portuguese or Polish or Spanish, or I already said Spanish, or whatever, Italian, whatever language it is that you speak. It's a chartist's job to translate from chart, which is technical analysis, to the native language that you're speaking. All I am is a translator, and you can be a translator by learning technical analysis. That's why Club DeFi exists. So what the chart is shouting at me is that there is a very high likelihood of a break above 28,545 over the next week. A week from today will be April 13th, the day of, and especially the day after we see the CPI data releases come out. The market normally invariably goes through a gigantic rally. We saw this data release on March 12th. Then we saw the next day, almost exactly 24 hours later, we saw a $4,300 rally that day. Same thing over here. Friday, January 13th, data came out January 12th. We saw the market rally $2,200 the next day. We didn't see the actual rally come into play after the CPI data release on Valentine's Day until 2 days later, and then the market rallied $3,000 in a day. A week from today, you are likely to see a massive movement. But here's the catch. You're going to almost definitely see a huge movement. But depending on what CPI data releases, whether it's positive or negative or 0.1 or 0.3, whatever the number is going to dictate where the market goes. Mark my words, I am very, very extraordinarily confident that you're going to see a huge move 6 and 7 days from now. On both of those days, you're going to see a lot of volatility. Which way the market goes, however, is determined by the size of the CPI data release. And that's the first risk factor here. If CPI doesn't actually go down, but instead it stays flatline and we go sideways at 6%, or, God forbid, it goes up and it goes up to 6.1%, in that case, you're going to see a multi-$1,000 drop on Bitcoin, and that's where a scenario kind of like this bottom scenario could come into play. Right now, Bitcoin is tracking with my most bullish scenario, which is pretty exciting. But if there is a negative CPI data release, then there is a possibility that Bitcoin could drop all the way down to $25,000 and potentially even down to $22,808, which is a pretty important level of support that we've had drawn here on our chart for quite some time. I did delete it at one point, so I'll go ahead and put it back. 22,808 is a level of resistance that was set here on the 12th of September, 13th of September, 2022. 22,808 would likely be my price target if we saw an increase in CPI. So let me just put that out there. If CPI goes up and we end up seeing this number go up to 6.1%, you're almost certainly going to see Bitcoin go down to 22,808. That is a drop of nearly $5,000. Even if we go up by 0.1%, you will probably drop to at least 25,236, if not even lower. But if you remember, I had 3 scenarios here, and right now, Bitcoin is actually playing out the most bullish. I had 3 scenarios. Number one, that Bitcoin would stay above this uptrending level of support, kind of bounce off of it, and then go and rally up to 32,935. My next scenario was that Bitcoin would drop down to 26,686, which is a level that we set on the 22nd of March 2023, reconfirmed on the 28th of March 2023, just a week ago, week and change ago, about 2 weeks ago. And then we would bounce and rally. And the third scenario I had to do with a negative release on CPI, or if Bitcoin just was not able to get enough exuberance from that CPI data drop, and that would be a drop back down to 25,236. I think this scenario of a drop down to 25,236 before CPI coming out is pretty unlikely at this point. Bitcoin has this uptrending level of support to support it, and it also has a flat level of support at 26,686 that will do a great job of holding it. And of course, if you guys have not been watching Lux Algo on all of these time frames is still technically bullish. We do technically have a bearish sell signal strong sell signal that's come into play on the 4-hourly chart, but that doesn't seem to be that bad. We've also seen that we also see that we're still under a buy signal on the daily chart. We never went through our CPI cycle sell signal on Lux Algo, excuse me, that we normally see during the CPI cycle towards the very end. Instead, we're staying up here above the uptrending level of support and 26,686, which means that Bitcoin will probably at this point trade sideways right up until the CPI data drop. It's very possible, therefore, that Bitcoin holds this flat level of support right here at 27,750, we'll say. Go ahead and draw that. The Bitcoin will hold support right here at roughly 27,750 above that level until CPI releases on Wednesday of next week at 8:30 a.m. When that occurs, you're likely going to see that massive breakout. So the first risk factor to talk about here is the potentiality of CPI coming back anything less than a drop. If we see a CPI drop of 0% and trade sideways, then it probably won't do a whole lot of anything to the market. If anything, that would be bearish. If we see CPI go up, you'd likely see a massive crash on Bitcoin of at least $2,500, if not something more like $5,000. If, however, we do see a drop on CPI of 0.2 to 0.3%, as I think we will, we'll see that massive rally. Why would CPI come back at a growth, though? Let's go to read more over here on BLS.gov and show table. You can see that there are a ton of different factors here in the Bureau of Labor Statistics that are relevant. Let's kind of run through these one at a time. 3 of the major categories are food, energy, and shelter. Let's look at each of those respectively. Shelter is up 8.1%. That's one of the pieces of the CPI component that is actually higher than 6%, which is the median. So if this comes down, it actually drives the price of that down quite a bit. Shelter, the rent of primary residence or owner's equivalent of rent of residences, is staying pretty stagnant right now. One of the reasons for that is because you have such high interest rates, which is causing the rate market to move to the upside in such a way that is causing the value of property to flatline and plateau across the economy. What you're seeing happen right now is because the effective federal funds rate is now sitting at 5%, the prime rate is a little bit higher than that, around 6% or so. And so when people are buying homes, they're not able to get anything less than a 6.25 to 6.5, normally more like a 7 to a 7.5% interest rate, whereas 2 years ago, they were getting houses for 3.125. So that causes a huge change in the value of property because of what people can afford. Let me just show you over here on just a mortgage loan calculator. Let's say you're going to buy a home and you're going to put $300,000. You're going to get a loan for $300,000. If you get a 7.25% interest rate, which is pretty common right now, let's just call it a 7% interest rate to make it simple. Your monthly payment before you get to, if you have proper mortgage insurance, before you get to your homeowner's insurance, before you get to property taxes, all of that, your monthly payment is going to be about $1,996. If you had a 3.25% interest rate, your monthly payment would be $1,300. So 3 years ago, you could have gotten a home pretty easily if you had a 700 credit score for 3.25%. Now you're getting it for 7, maybe 6.75, but you're normally getting it for 7. Which this calculator does not want to cooperate with me. You're normally getting it for 7% on a 30-year fixed, which means you're paying $700 more a month. All the while, Americans are losing money to inflation because they have the relatively similar income, but everything else costs way more. $100 of groceries used to fill up a shopping cart. It doesn't barely fill up the part where the toddler sits anymore. Everything costs more, including rent. So what that means, and this is where this comes into CPI, what that means is that there's a general flatlining of property values. There's still more people coming into the workforce. There's still more people that are coming of age that want to buy houses. There's still a growth in population. There's still growth in the housing market. There's still a ton of property being built, etc. But people aren't able to afford a $400,000 home anymore. Now they're looking for a $240,000 home, and they're finding them, which brings the buy pressure down on those higher end homes and drives it to the upside on those lower end homes, driving more demand not only for construction but also more demand for inventory of lower priced homes. We're talking in the like 180 to 300 range for most Americans, unless you're in a big city and you're in San Francisco and you're paying $2 million for a closet. Anywho, the point is, with the rising interest rates, it's causing property values to come down, which means that the inflation in this part of the chart is starting to get under control as well. We've seen this come down slightly. It's likely to come down even more. So that's shelter. Shelter is likely to come down somewhat. Now, shelter is not the biggest component. Food and energy are two of the biggest components of CPI. Food is sitting up 10.2%. Food is an interesting one because there's a lot of things there's quite a lot of things that are impacting food. One of them is egg prices, although that's a very small component. Another one is dairy. Another one are cereals and bakery products. Food is starting to come under control because it was hit with a shock when the supply chains got shut down 2 years ago because it was very difficult to get fertilizer. It was very difficult to get new farming implements. It was very difficult to find people that would go out into a field and work because they were sick. Food prices are starting to come under control. That's likely not going to stay the same in the next couple of years because we're undergoing a fertilizer crisis. That's going to become a problem in 6 months. But right now, you're starting to see some of the first spring harvests in the United States coming up relatively soon. That's also going to drive food prices down. I think food's going to come down. Another one that is actually below 6% is energy. Energy has gotten itself under control because the United States is highly energy independent, probably has the potential to be the most energy independent nation of its size on the planet, far more so than China, arguably more so than even Russia, because Russia needs to export so much of its energy commodities for the purposes of generating revenue to fund their war. So the United States has a huge amount of energy independence if it would tap into it, which would definitely be the wise thing to do, and we've definitely been doing a lot of that recently. One concern in the energy sector is that the profits right now are so ridiculously high for gasoline and for other types of fuel that the oil companies are making more money than they've ever made before. 3 years ago, they thought they were going to disappear in 10 years because of the green revolution. Now they are printing money left, right, and center. And instead of reinvesting that into new drilling and fracking, they're reinvesting that into buybacks and stock dividends. So energy being down to 5.2% is great. It will probably come down slightly more as natural gas starts to come under control as well. The petrochemical market got under control quite a lot faster than the natural gas market has gotten under control. That's likely going to come down, causing energy services to come down, including electricity. As coal comes under control as well, energy will continue to come down. So those are the three big areas that I wanted to show you. All three of them have pretty solid outlooks over the next 3 to 6 months. Next 3 to 5 years, not so much. But with all three of those starting to come down, in my opinion anyway, you're likely to see CPI drop by about 2%. By about 2% in total, about 0.2% to 0.3% next month. The reason that's significant is because that's one of the risk factors against the increase, against the rally that we could be witnessing happen relatively soon. All right, if you're enjoying today's stream, I want you to do a few things for me. Number 1, hit the like button. Number 2, subscribe to the channel. And number 3, hit that post notification bell. We go live here every single weekday on Coffee and Crypto, and I just want to share with you guys information that's going to help you succeed. I want to help you be successful in cryptocurrency. That's been my dream from day one. That's always been my dream here in cryptocurrency, to help you be successful in this market. Ever since the day I started the YouTube channel, November 16, 2017, 5.5 years ago, I have been making videos trying to help you become what I later realized was something called financial sovereignty. It is not my dream for you to die a rich man with no friends and no life and no purpose. It is my dream for you to die having accomplished the purpose, hopefully decades from now, having accomplished the purpose that God has placed on your life, and you had the finances to do it, and you weren't constrained by your finances. It is not my dream for you to die a billionaire. Great if you do that. That's wonderful. But I don't want money to be... I am very, very forthright about this. It is not my dream for you to become super uber rich just so that you can have no friends and cry yourself to sleep every night in your $3 million mansion and in your $400,000 Lamborghini. Good for you if you buy those things. I have no problem with that. But that is not going to bring you fulfillment and joy in life. It won't. I have experienced a lot of wealth in my life. It is not what brings you the real happiness. I know billionaires. I've worked with them. I know founders of cryptocurrency projects. I've worked with the biggest channels in YouTube. I've been around lots of money. I've watched Lamborghinis and Ferraris zip up and down South Beach in Miami, and I have watched the same people getting off $40 million yachts look miserable because they had money, but they didn't have a purpose. They had wealth, but they didn't have connection. They had connections, but they didn't have relationships. And one of the most impactful conversations I ever had was with a homeless woman named Tina. She told me she had read the book of Acts over 1,000 times. She was right across from the W in South Beach in Miami. I think it's called the W, I think, right? Very, very fancy hotel. And that woman said, I watch people get off of their yachts and out of their Lamborghinis and come down from their $2,000 a night hotel rooms every single day, and they're miserable. And I am on the streets begging for food, and I am so incredibly happy with my life because I have a relationship with the Lord Jesus Christ, and because I have something that they don't. I have a purpose, and I'm able to have fulfillment through it. It brought that conversation. We sat there for 2 hours. We had a ton of food in our backpack because we were walking down the street with our toddler who was 1 year old at the time. We gave her all the food we had. We talked to her for over an hour anyway, and it completely shook me to my core talking to that woman. She had no money. Everything that she had was within a 2-foot radius of her. By the way, Deezy knows this conversation because Deezy from Around the Blockchain walked up and said hi to me and introduced himself to her. Great to see Deezy there. This was back at the Bitcoin 2022 conference. And it was just one of the greatest conversations I've ever had. She didn't have any money, but she had what she needed. She had a relationship with the Lord. She had a relationship with people, and she had an internal peace and joy that was great. It is not my dream for you to become rich for the purpose of becoming rich. It is my dream for you to make enough money to do whatever it is in your life that you are called to do, full stop. And I know that cryptocurrency can be a part of that. I know that the cryptocurrency market can be a part of that. That's why we talk about how to become successful in cryptocurrency in Club DeFi. I would highly encourage you to take Club DeFi if you have not already. I'd highly encourage you to hit the like button, subscribe to this channel, because we are on a mission to build financial sovereignty for ourselves so that we have complete and total control over our money and we're not a slave to it. I want your money to serve you, not the other way around. It's very common in the United States for Americans to be indebted to their debt, for them to be a slave to their finances. That's not what I have for you. That's not what the dream I have for you is. That's not what the dream that God has for you is. That's not what the dream that your parents more than likely had for you. And deep down, that's not the dream you have for yourself. You don't want a bunch of money and nobody to enjoy life with. I want you to have a purpose. And I want you to enjoy your life. And I want you to be fulfilled in your life. And I want you to store up treasures in heaven. The word says in Philippians 3:14, I press on to reach the end of the race and receive the heavenly prize for which God through Christ Jesus is calling us. Store up your treasures in heaven. Even if you're not a Christian, my point is, have a purpose in your life and pursue that. I promise you your purpose is not just to add 3 extra zeros to your bank account. I've done that before. I've been there. Guys, I've had millions of dollars transact through my hands in the last 5 years, and it is not what has brought me purpose, not even close. It's my family, the relationships that I have, and the things that I'm building that have an impact on others. That's what's brought me purpose and fulfillment in my life. All right, I went off on a little bit of a tirade. Really appreciate all of you guys for sitting through that. Make sure you hit the like button if you have not already. Let's go ahead and continue on with our analysis here. Here's the deal, guys. Bitcoin has a couple of other risk factors that could make the April 12th rally, how shall we say, difficult. The SPY. The S&P 500 had been rallying and has been rallying quite substantially over the course of the last month. Ever since Bitcoin began this rally, the SPY has rallied 30 points, up 8% in 21 days. It broke above this curved downtrending level of resistance and this flat downtrending level of resistance. Broke above both of them, went into blue sky breakout, and this is likely one of the causes of Bitcoin being able to continue in a rally despite the fact that towards the end of the CPI cycle, remember we talked about CPI cycles in our previous video, towards the end of the CPI cycle, you normally see a correction. The reason we're likely not seeing a correction is partially to do with SPY being in a rally, because if you don't know, Bitcoin and the S&P are incredibly heavily correlated. Wherever the SPY goes, Bitcoin says, I will go where you go. I will stay where you stay. And Bitcoin right now has been having a little bit of trouble the last few days. Unsurprisingly, so too has the SPY. The stock market's been having trouble. Why? Well, there's a downtrend that you need to know about. It's this one right here. This downtrend connects our local high on August 15th, 2022 to our local high in early February of last month, and it shows that the market is moving, is having trouble breaking above that level. If the SPY is able to break above that level in the next couple of months, Bitcoin is going to be sitting very, very pretty. Bitcoin goes into rallies when the stock market's in a rally. However, it's more likely that the SPY is going to correct from here and probably go through a bit of a cyclical correction like this. And it may attempt to break it. It may not be able to break it. It may not even come up here to attempt it in the first place. But in general, the stock market has moved into this symmetrical triangle pattern right here that is actually one massive bear flag with a price target. As you can see, down around 314 points, around 320 points. That is below our local high that we set here on Valentine's Day 2020 before the pandemic caused a massive crash in the market. It is very likely that the stock market is going to struggle for the remainder of this year. The only thing that would really stop that is if CPI got under control and there was more consumer confidence in the manufacturing industry in the United States. That needs to be rebuilt out, and there also needs to be a stabilization in the tech sector, because a lot of this decimation in the stocks is having to do with the decimation of the tech stocks. Now, it's not just the SPY undergoing a correction that could make things difficult for Bitcoin. It's also the fact that the Dixie is rallying. Now, the Dixie's only been rallying for just a few days, if even just a few days. But as you can see, the Dixie had a downtrend right here of resistance and had a downtrending level of support right here. Depending on how you drew it, there were two. You could draw it either right about here, or you could draw it right about here. Regardless, the Dixie has kind of bottomed out and is now coming up to test this resistance level. So the Dixie going up is not good, because remember, the Dixie is inversely correlated to Bitcoin. Whenever Dixie goes up, Bitcoin goes down. Whenever Dixie goes down, Bitcoin goes up. So when you have both of those markets, the Dixie and the SPY, moving in opposite directions in the wrong direction, you see Bitcoin struggles. When the Dixie's going up and the SPY is going down, Bitcoin normally goes, say it with me, down. Now, the good news is on Bitcoin, it is now starting to rally of its own steam. It's not just rallying because of what the SPY, the Dixie, and the CPI are doing. It is now rallying of its own volition, starting to decouple, to use the buzzword that people like to say in cryptocurrency. It's starting to decouple from those markets. And if we do see that CPI data drop coming in relatively soon on April 12th, then that, if it's positive, if it's a bullish drop where we see a 0.2 to 0.3% drop, that will likely lead Bitcoin to the upside anyway. But if we do not see anything greater than a 0.1% drop, if we see a 0.1% drop or greater, we'll probably be okay. But if we see a flat line, or we see a increase on CPI, 0.1% increase on CPI, and the stock market's correcting, which it will definitely continue to correct on a CPI increase, and we see the Dixie rallying, which will likely happen of its own on its own, that would spell disaster for Bitcoin, and again, that would probably push us down into the low 20s. So, what's the likelihood of those risk factors coming true? Well, we already talked about the CPI. The CPI, in my opinion, is likely to come down 0.2 to 0.3%, somewhere in that range. Maybe a little more, maybe a little less. Point is, I think it's going to be bigger than 0.1%, and I think it's going to be less than 0.5%. I also think that the stock market is going to go through a bounce in the next week, and it's going to rally, because the stock market has really started to move into its own accumulation phase. If you look at the stocks, the SPY, we were in a bear market, a very decisive bear market, in pretty much all of 2022. Pretty much the entire year of 2022 was one straight bear market. Now stocks are really starting to trade sideways and move into this sideways accumulation, because there's not really a giant economic crisis right now. If anything, there's a giant economic opportunity in the military and in the military-industrial complex for there to be a ton of production of new shells and new military armament. Now, the United States is basically just throwing everything that was slated for disposal at the Ukrainians, because even though it was slated for disposal because it's 25 years old, it's still higher tech than whatever the Russians can come up with. But one of the things that the United States is currently actively increasing its manufacturing for are munitions. The munitions race in the United States is remarkable right now. Just to give you an idea of how many bullets, tank shells, and shoulder-mounted rockets are being fired in Ukraine, just from the Ukrainian side, not the Russian side. Got my history backed up there. Just from the Ukrainian side, all military munitions production in all of NATO was 1/5 enough to meet the ammunition demands of the Ukrainian armed forces right now. 1/5. So you're talking Canada, Germany, an industrial powerhouse, Britain, France, Portugal, Spain, Norway, the Netherlands, the United States, Canada, all of them did not come close to being able to produce enough ammunition. So the munitions production part of the military-industrial complex in the United States is accelerating at insane velocities. Not to mention, part of the reason for that is that it's not just because Ukraine is buying arms. You've also got Japan, Taiwan, Australia buying huge amounts of arms. Australia is slated to be buying nuclear submarines from the United States, which will be equipped with cruise missiles that need to be purchased and acquired. Taiwan are accumulating insane numbers of armaments. The Japanese have been accumulating high-tech ballistic missiles such as Tomahawk missiles, which have only ever been sold to Britain, not even to other NATO members. Japan just purchased some of those, being only the third nation in the world to have them. So there's a huge amount of ammunition production going on in the United States. That is a part of the economy that will end up causing the market to move to the upside. You look at any of the companies that produce munitions, they are a pretty good buy right now because they've got 10 times the amount of work that they did 3 years ago. Because the world's a much less stable place. People say it, and it's sad, but it's true that oftentimes war is good for business. I don't like it. I don't want to tell you that, but I am here to tell you the truth. And oftentimes that is a very accurate maxim. And the reason that's important is because the United States stock market is going to have to figure out how to go back to its next highs, considering the United States central bank balance sheet is continuing at this level. You can see the USC BBS is, this is a bit of a mess, but in general is still moving to the downside, which means the stock market is going to have to get used to a slightly more difficult liquidity market. It's going to have to get used to money being more tight than it was 3 years ago. And that will probably last for a while considering interest rates are so high. That means the stock market's probably going to have a lot of sideways trading. I do think that it will continue in this sideways symmetrical triangle pattern for a while. And then you'll probably see an indecisive break where it break above, then below, or break below, then above, whatever it is. And then the market ends up trading sideways here for the next couple of years. That in general, leaves Bitcoin the ability to go into a rally without needing the SPY's help. That means that the SPY is likely not going to go into this giant bear market, except maybe a drop down to 337, especially considering the Fed's pivot on balance sheet tightening. And that will end up meaning that one of those threat factors for Bitcoin starts to evaporate. Now, the Dixie, looking at the Dixie. The Dixie is having a very, very, very strong drop, and at some point that will stop and reverse. The Dixie will probably stop that trend relatively soon, and part of the reason for that is because all of the inflation that hit the dollar, the dollar was able to weather it a lot better. That's why the dollar and the Dixie had such a massive rally here. But then the other currencies started catching up, and the Dixie had this correction. As we start to stabilize, Dixie's probably going to enter into this kind of sideways market as well and continue to gain value against the rest of the world. Why? Well, quite simply, that's been the trend for the last 15 years. But also, the reason for that is because of a couple of other factors. Number one, the Russian ruble is accepted nowhere. One of the last people that was willing to do business with Russia, Turkey, finally got on board with many of the sanctions packages against Russia over just the last few weeks. Turkey is no longer playing both sides of the fence. They're no longer trying to have their cake and eat it too. Instead, they're actually siding with NATO. They just let Finland in, for example. That is not something that Russia is going to like. They're one of the last people that were taking the ruble. Now, of course, the Chinese will do business with the Russians, but they don't want the ruble. The ruble's value is completely useless. That is one of many currencies that are struggling that will end up driving more value and more economic power into the US dollar. Another one would be the Chinese yuan. The Chinese yuan is going to collapse, not in the sense of the Zimbabwean currency or the Argentinian peso. I think they have a peso, correct? It's not just going to collapse like that, but it is going to continue to lose value. It's going to continue to lose purchasing power. One, because of the devaluation of the depopulation of China and their offlining as a modern industrial great power, but also because the Chinese use devaluation of their currency as a weapon. So that's going offline. It's going down in value, making the dollar stronger because the dollar and the Fed have a market interest in keeping inflation as low as possible. And the third factor, outside of Russia and China, is that the rest of the world is going to go through a lot more inflation than the United States because the rest of the world is going to get hit by deglobalization much harder than the United States. Because the United States, of every nation on planet Earth, is organized in a way that it is most insulated from the negative consequences of deglobalization. Why? We're big in population and in landmass and in relationships and in industry and in natural resources. We're large. We have the ability to build out the manufacturing plant here in the United States with close cooperation with Mexico. There are many different factors that go into manufacturing, but one of them has to do with how much your labor costs. If you're doing something that's very, very simple, like you run a tire factory, or whatever it is, you want to end up having people do that don't cost that much to pay. You can argue about the ethics all day, but the fact of the matter is, if you're a business owner and you're trying to build a factory, what normally happens is that unless you are using Made in America sticker as your branding and as your marketing, and you're willing to charge 30% more, normally you're going to overseas or send the manufacturing to somewhere over the horizon. That typically is going to be done in Mexico now instead of China, because Mexico is now one of the largest trading partners with the United States. It's right across the border. It's also right across the border from a huge population base in not only California, but also in Texas. And so you're going to end up seeing a lot of manufacturing being built out on the border, with the more higher-end manufacturing that requires and necessitates and is valuable enough to warrant higher-paid labor in the United States doing that labor, and then lower paid labor being done in Mexico. I'm not saying that it's fair that you pay two different people to do two different the same job but on the other side of the border, but the point is that's what's going to happen. That's the way it works. So you're going to see a manufacturing hub being built out in Texas and in Mexico, in northern parts of Mexico. And that's going to lead to a lot of manufacturing independence in the United States. That's not going to happen in the rest of the world. Much of the rest of the world does not have a neighbor right next door where the labor cost is a third as much, and they have both gigantic workforces to build out a large enough manufacturing industry to supply all of their needs and be independent from 80% of the rest of the world. Basically nowhere else in the world do you find that other than in Southeastern Asia. Southeastern Asia is going through a population and a political crisis and a water crisis and a demographical crisis and a climate crisis and a regional military crisis all at the same time. So Southeast Asia is in trouble, big time. So all of their currencies are going to go through inflation. Same thing with Europe. Europe is really struggling with their industry. Why? Because they import so many of their raw goods, especially their petrochemicals, from Russia. Nobody wants to do that anymore. So now they have to bring their LNG in on ships instead of over the Nord Stream pipeline. Now they have to bring their oil in on oil tankers instead of through oil pipelines coming out of Siberia. That drives labor. That drives cost of finished goods up. It drives electricity costs up. It drives heating costs up. It drives anything that has petroleum in it, which you look around the room you're sitting in, I guarantee you will find at least 15 things that have petroleum in them. For me, the sheath on this microphone, these little knobs right here, this microphone, boom, is metal, but these clips are plastic. My computer mouse, my phone case, the back of the keys on this lens cover, my Stream Deck, all of this is plastic. All of it has to do with petroleum. Other than the British oil fields in the North Sea, there's not, and some in Scandinavia, there's not a lot of oil production in Europe. Same thing with most of the rest of their raw resources. That's why colonialism happened. There were no raw resources there. There was not that much coal. There's not that much iron until you get into the Far East, into the far eastern parts of Europe, which are currently in a state of warfare. So the European currencies, namely the pound and the euro, are going to undergo inflation. All of that to say that the Dixie is likely going to be very strong because Russia's currency is struggling, China's currency is struggling, all of Southeastern Asia's currency is struggling, South America and Africa's currencies have been struggling, and they will continue to struggle. That's kind of not has anything to do with our current politics. That's just the way it has been. And Europe's currencies are going to struggle. The pound and the pound and the euro. Why? Because of increased manufacturing costs, which means that Dixie is going to have a very strong next couple of years. The dollar is going to be in a better position in 5 years than it has been in a very long time. That's going to make things hard on Bitcoin. So, risk factors. The CPI not being as big as we think. I do think CPI will come down, so that one's not that big of a concern to me. Stock market. I think stock market will have a bottom. Will correct over the next couple of weeks, which could make things a little bit harder, but Bitcoin seems to be rallying of its own steam now. And then Dixie's in its own short-term trend. I'm not too worried about it in the long term. I'm not too worried about it in the short term because it's still bouncing around in this range. I don't think by April 12th anything terrible will happen that'll make that rally null and void, but you give it the next 5 years, Dixie is going to be a threat to Bitcoin, because one of the value propositions of Bitcoin is that if the dollar is weak, then that means there's nowhere else for anyone to run other than to Bitcoin. But if every other currency in the world is weak, then everybody can run to the dollar. For Bitcoin to thrive, you need a currency crisis in the dollar. And the last time we saw a currency crisis in the dollar, Bitcoin rallied to $69,000. That's probably not going to happen relatively soon. The dollar is probably going to be in a very strong position over the next several years. That might be a controversial take. Many people think, oh, the dollar is going to disappear. Not necessarily. Not necessarily. All right. ASEAN agreed to ditch dollar, lol. What are you talking about? That is a very, very loose ragtag group of nations that can't agree on anything. That is not the Pacific NATO that everyone wants to make it out to be. They are a very loose partnership of Asian states with some economic alliance. It is not a military alliance. It is not an alliance that has a whole lot of punching power outside of China, but China has already been fighting against the dollar for a very long time. Let me show you the current countries in the Association of Southeastern Asian Nations. That's what I was trying to say. You've got Indonesia, Thailand, Singapore, Laos, Cambodia, Malaysia, Brunei. Then you've also got a few that are very influential on ASEAN. Of course, China being one of them, because many of these nations are in or right around the South China Sea. You look at Singapore, you look at Indonesia, they're right there in the Strait of Malacca. Go to Maps, not Maps, so I do that every time. Google Maps. Many of those nations are right there at the Strait of Malacca, which is perhaps one of the most important shipping lanes on the planet. The Straits of Malacca are right here, right next door to Singapore. This strait right here is where those nations are sitting. Malaysia, Indonesia, Singapore, three of the largest economies in ASEAN. Malaysia, Indonesia, Singapore. They're right there on the Malaccan Strait. Those nations have a lot of power over China, but because China has so much interest in the Straits of Malacca, because like 70% of their oil comes from the Persian Gulf through the Straits of Malacca up into the ports here in the South China Sea and into the East China Sea up near Shanghai, China has a vested interest in building out military infrastructure in the South China Sea. This is where they've built many of these different artificial islands. In fact, I think they might have one of them right here. I think this is actually one of the artificial islands that China built. My point is, China has a vested interest in the military integrity of this area. And this is called the first China. Forgetting the name of it. Anyway, most of these nations, South Korea, Japan, Taiwan, the Philippines, etc., are allies of the United States. China really only has military naval dominance and projection right here in the South China Sea, next to Malaysia, Singapore, and Indonesia. China doesn't have a whole lot of interest in the US dollar themselves. They also have a whole lot of interest in using these nations. These nations are moving away from the dollar because China wants them to. But China itself does not have anywhere near enough power to do anything to the US dollar because they don't try and build their currency in a way that would make it appealing. Nobody wants to take the Chinese yuan. These nations, if they do, are doing it because of the gigantic military right here. Another one, Brunei. The little kingdom of Brunei is right here. This is a kingdom. A lot of interesting stories about the kingdom of Brunei and the king's giant car collections right here on Borneo. That's this island. This island's called Borneo. Cambodia. Cambodia is right here. Same deal. Thailand is in ASEAN, right? Yes, Thailand, right here. These are all these nations right here. All of them have naval borders to the South China Sea up into the Gulf of Thailand, and this is where the majority of Chinese naval power sits. These nations are heavily influenced by China. They are not moving away from the dollar because they want to. They're moving away from the dollar because China could shoot at them anytime they don't agree with them. That is not a concern for the dominance of the dollar because China itself, which is the threat to them, is having a very, very, very hard time. Tim Burns said, I used to live in Brunei. Cool. Tell us all about it. Tell us all about it. The depths of Jebb's geopolitical knowledge is mind-blowing. No, it's not. I oftentimes am sitting here talking about something geopolitically. I'm like, oh my gosh, I forgot the name of that. Or, oh my goodness, how do I not know that? Or, oh man, I made a mistake here. I really don't. At this point, people have called me a technical analysis expert. I don't want to give myself that title, but if I was an expert in anything, it'd probably be TA. I'm not a geopolitics expert. I am a giant history nerd and a giant geopolitics nerd, but I wouldn't say I'm an expert. Hey Jebb, if BRICS coin goes live, would that be a negative effect on Bitcoin? BRICS. Okay, let's talk about BRICS. I love geopolitics. BRICS: Brazil, Russia, India, China, and South Africa. Let's take a look at BRICS. BRICS is kind of a joke, other than Russia, China, the RIC part. Brazil, way over here. Russia, India, China, very far away. South Africa, why? Because they needed it to not just be one brick. They needed it to be multiple, so it was scary. India and China hate each other. Russia and China hate each other. They're just pretending like they're best buds right now because China has interest in being on the same side as Russia, because China needs to be able to acquire petrochemical industries, petrochemical supplies if they invade Taiwan, and the United States launches an embargo on China and they're not able to get anything out of the Persian Gulf, because the United States could place one aircraft carrier right here at the transition between the Persian Gulf and the Gulf of Oman, right here in the Strait of Hormuz, shutting down 70% of their petrochemical income. So China wants Russia to sell them oil and gas. They also want water from many of these different parts of Russia. The Chinese actually came up here to this lake called Lake Baikal and tried to build a water pipeline from this lake, which is actually one of the largest freshwater lakes on the planet, which basically nobody lives there because this is in the far eastern parts of Russia. They tried to build a pipeline down towards Inner Mongolia and towards Beijing, and the Russians found out and stopped it. They did it without permission. They were going to bring it straight through Mongolia. China has its own interest with Russia. China and Russia hate each other. Why? This area up here, it's called Northern Manchuria. There's nothing here but a bunch of reindeer, but Russia came and conquered it from China and built out some massive cities called, for example, Vladivostok, and built huge naval facilities over here. They took most of this land right in here towards the end of the 1930s, I believe it was. China was in the middle of a big civil war. They didn't have the ability to fight off the Russians because the Russians outnumbered them massively. They took all that land. China still has a vendetta against Russia for doing that. Russia and China have every reason to hate each other. They are pretending like they're best friends right now, and Russia's going to end up stabbing China in the back, and China knows it, but they're playing that game because they want what Russia has. China and India are two of the biggest competitors on the continent. They're not friends. South Africa is a non-factor geopolitically, and Brazil is about to undergo a giant farming crisis because they have no fertilizer. They don't have a fertilizer industry to create enough fertilizer to keep all of these farms that they have going, because these farms need a lot of fertilizer because they are reclaimed land from the Amazon, and when you destroy the jungle, you remove all of the nutrients and all of the nutrient generation for that farmland, and so they're relying on a ton of different nitrogen and phosphate and potassium, potash from Canada and other nations. That is a supply chain crisis that's undergoing right now. All 5 member states in BRICS either hate each other or they're about to undergo a huge crisis. South Africa is probably, believe it or not, actually one of the most stable ones in the next 40 years, which is probably the first time you ever heard that about South Africa. I have friends from South Africa, so I'm not hating on South Africa. Just my point is, BRICS is not a concern. People are very scared of BRICS. It's not something to be scared of. I learned more in 20 minutes than I learned in high school off this channel. I don't know. China and Russia just got together. Yeah, the kind of pact that Russia and China just signed is the same kind of treaty that whenever Russia is about to stab somebody in the back, they sign. I forget what it was called. It was a strategic partnership. That's what it's called. Russia signed a strategic partnership with China. Every time they've ever signed something called a strategic partnership, they end up stabbing them in the back. All right, guys. All right, guys. Appreciate all of you tuning in. Let's go ahead and read some chat, and then we're going to go ahead and wrap out. Do you think Australia will be insulated due to natural resources? Australia has a lot of natural resources, but they don't have very much ability to process and manufacture. To process those those raw resources into finished goods. They rely heavily on manufacturing imports. Never heard of the NAFTA agreement? I have heard of the NAFTA agreement. Something that's definitely helping the United States and Mexico to build out that free trade alliance. All right. Thank you guys so very much for tuning in. Oh, we had a super chat that I didn't notice. Matt Graham donated £2, said, have been here since 2021. Best thing ever, smiley face. Thank you so much. Henry Ridgway said, Jebb is the GOAT. Thank you. Queen said Queen Sarah. She is my queen. That's right. Amen. God bless you. Vince AIO said, I hitchhiked across the continent. Met many people like that. Less stuff, less stress. That's typically the way it goes. My goal, Jonathan Weiner said, my goal is to have financial sovereignty to just pastor for my fellowship wherever in the world God wants to send me. Love it. All right, guys. Well, I am going to have to go ahead and wrap it out. Thank you guys so very much for tuning in. Make sure you stay tuned because we've got a video coming out on Saturday that I don't think you're going to want to miss. Make sure to stay tuned for that. I am going to go. Also, by the way, make sure to sign up for Club DeFi's Principles of Technical Analysis if you have not already. Remember, guys, you are having signals shouted at you every single day by the market. And if you listen to those signals and you use those signals, you can make a lot of money in the cryptocurrency space. But to do so, you've got to have a foundational and fundamental understanding of cryptocurrency technical analysis. Without it, it's very difficult to succeed in this space. You've got to start with TA and then, yes, look at the news and then, yes, look at the trending topics and then, yes, talk about Sam Bankman-Fried and geopolitics and all of that. But it's got to start with the technicals. That's the core of everything that generates revenue in this space if you're talking about trading and investing. For you to be successful in cryptos, trading and investing, you've got to learn technical analysis, period. It's a necessity. And I do believe that I can teach you a thing or two about technical analysis. I've been doing it every day here on the channel for over 5 years. We've got 2,300 videos up on the channel doing technical analysis. I love doing technical analysis. It's my life. It's one of my great passions in life, and I want to share it with you. So make sure you check out Club DeFi's Principles of Technical Analysis and join the tons of people that are signing up right now. Make sure you shoot us an email if you are a CT2A alumni, because we have a coupon code waiting for you. And if you're in Club DeFi's beta, make sure you shoot us an email as well. We just gave another coupon code to somebody who was in Club DeFi's beta who wanted to join the actual academy. So feel free to do that. Shoot us emails if you're interested in either one of those coupon codes and you fit into one of those groups. I am going to have to go, but before I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling. Got a real good feeling.